Cyber threats are rising fast across Asia Pacific, but most companies still aren't covered, with only 17% of digital assets in the region being insured. To discuss this, we have Adam Peckman from Aon and Jennifer Brainey from Gallagher Ray. Now let's start with what's happening. Why is cyber insurance penetration so low in Asia Pacific?
There have been much fewer contractual, regulatory, litigation drivers that drove the early adoption of cyber insurance in regions such as North America and Europe. I think secondarily, there have been far less material incidents and claims in this particular region. And as we know, the experience of the cyber insurance market has been to this point that a large incident impacting any particular industry often provokes companies in that industry looking to buy cyber insurance as a top-down mandate. And that has not been the legacy experience within the Asia Pacific region. However, the results of our global risk management survey suggest that the rate of companies at the moment evaluating cyber insurance remains quite low, so 17.5%. But we believe that that trend is changing. And that's not only because the regulations in the region are becoming more stricter around cybersecurity and data privacy, but more companies in this region have become exposed through their critical dependencies on cloud computing providers to issues such as aggregation and downtime. We also see things like AI driving up the rate of social engineering claims. We saw that up 233% last year. So I think a number of factors are probably going to start driving up that low adoption rate within this particular region.
The usual opinion is that there's a lack of awareness of cyber insurance. The coverage isn't suitable to the APAC market. We're using perhaps very comprehensive US products, and they're not necessarily suitable. The agents selling the products aren't trained appropriately to sell these products to clients. And I think all of those points are quite relevant. But a slightly alternative view we have is that actually we need a supply-led solution for the APAC market. We need to take the supply of cyber capacity and capability to where the demand is and will be in the future in the APAC market.
With that, can we go through the specifics? What barriers stop firms from insuring more of their digital assets?
Cyber risk, according to our most recent survey of leaders in the region and globally, remains the number one risk concern for business leaders. And coupled with that, the velocity of CapEx in investing toward things such as digital transformation, artificial intelligence, remains exceptionally high. So, it's quite a contradiction when we then speak to business leaders about how much of their assets are covered by cyber insurance. They only report 17% of those digital assets being covered by it. So on the face of it, yeah, it is quite contradictory that we have this insurance protection gap. However, when we do follow up with those business leaders and those companies as to how many are using any type of financial modeling, any type of analytics to inform their decisions around the use of cyber insurance, it's only 12.3% in this region. So very low. So very few are using any type of financial analysis. We believe that more companies starting to adopt financial analysis to understand what is the role of cyber insurance will see greater adoption of insurance, cyber insurance in this region.
So it is this lack of supply, in our opinion, but it's also the supply of adequate options. So as we mentioned, coverage, but also line sizes. Are big enough line sizes actually available for the larger risks? And are the cyber services, the pre and post incident services, actually available to all customers to actually support them through the process as well? So the good news is that there are a lot of cyber experts in the APAC market developing these solutions. So we're really hoping that the market is going to be taking off in the very near future.
So on the part of the regulators, what role should they play in encouraging stronger cyber resilience?
One of the reasons that cyber risk remains the number one risk topic for business leaders is because of the increased visibility that regulators and regulations are having in this region around topics such as security, privacy, and obviously governance of emerging technologies such as AI. So we've believed that, the regulators are already playing a fairly constructive role to elevate that. And that shows up in the data when we look at the state of cybersecurity across the Asia-Pacific region. That has been moving in lockstep with a lot of the introductions of new regulations and requirements across many of these jurisdictions. Maybe if we identify 3 topics that regulators can continue to play a positive role in elevating cybersecurity and cyber resilience in this region, I think the first would just be elevating the obligations and the requirements or the expectations that regulators have on topics such as security, data protection, and risk governance of those emerging technologies, and that's a fairly obvious one. I think the second would be establishing requirements on the security testing of emerging technologies such as AI, which we've seen out of places like the EU. And lastly, I think requiring more mandatory incident reporting. Now, that obviously has the benefit of providing much more information and intelligence for companies in the same industry, companies in the same geography, but also just sharing of more insights on what is driving incidents within the region will improve cyber resilience as companies can learn from, what has been driving losses and what has been driving incidents.
So regulation is incredibly important. And in APAC, we see a patchwork of regulation, and it's very much a developing area. And we can't wait to see what we're going to see in the regulatory space in Asia Pacific in terms of additional requirements, because this really means that end customers have to think about their cybersecurity and they have to do something about it. Of course, cyber insurance is just one part of risk management. It's not just an automatic solution. So wouldn't propose necessarily that we have compulsory cyber insurance. That seems to be a popular feeling in the market. Don't necessarily think this would help with the motivation to have a full risk management approach. It might just result in people buying very basic cover. It doesn't really motivate the suppliers of capacity and capability to come up with something more adequate for the APAC market. So regulation is incredibly important, but of course, it needs to be used in the right way to really motivate the market to do the appropriate thing for the APAC market.
Thank you so much for sharing your insights, Adam and Jennifer. Looking forward to having you back on the program.
Thank you for having me.
Thank you very much.
Once again, those were Adam Peckman, Global Head of Cyber Risk Consulting and Head of Cyber Solutions for Asia Pacific at Aon, and Jennifer Brainey, Head of International Cyber at Gallagher Re. For more news, visit insuranceasia.com.